This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, live across Bloomberg platforms, radio, TV, YouTube, Bloomberg Originals. Yeah, it is Thursday, January 8th, 2026. And I got to say, not so great for the big tech names, but, you go inside the major indexes and you are seeing more names actually gaining in today's session than losing ground.
Yeah, 370 stocks to the upside right now, 133 to the downside in the S&P 500. But like you said, Carol, it's those big tech names that are certainly dragging the index down. IT, information technology, down 1.9%.
Ouch.
Every other industry group except for healthcare in the green today.
Although a big day for Alphabet. We'll get into that a little bit later on. Hey, coming up, top of mind for us this hour is today's U.S. economic data drop. We had a bunch ahead of tomorrow's closely watched U.S. jobs report. We're going to tackle that. Plus, we're going to go around the halls and floors of the massive annual tech event that is CES. We'll do that with our own Ed Ludlow.
Also, why President Trump's plan to ban institutional investors from buying homes, at least according to one Bloomberg opinion columnist, is not the way to make housing more affordable. All that and more coming up over the next hour right here on Bloomberg Businessweek Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Hey, thank you very much. Here's what's going on. The Dow higher, the S&P, NASDAQ 100 index, all in the red. Russell 2000 index of small cap shares up now by 1%, keeping it all in context. S&P lower by 0.1%, down 6 now. 69.13 where we stand on the S&P. The Dow up 252, up now by 0.5%. NASDAQ and the NASDAQ 100 index both in retreat, down by about 0.7%. The 10-year 4.17%, with the 2-year 3.48%. Spot gold little change, down under 0.2%, 44.49 the ounce. Silver big move there, down 3.1%, 75.73 the ounce. And West Texas Intermediate crude now rallying 2.8%, 57.57 for a barrel of WTI. Bitcoin just below 91,000. It is falling by under 0.1%. Defense stocks rallying as President Trump signals plans to ramp up military spending. Lockheed Martin right now up 3.4%. Northrop Grumman up by 2%, but Kratos, KTOS on the ticker, it is up by 14.4%. Again, recapping here, S&P 500 index trading lower right now by 6 points, down 0.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. We're going to get back to the markets and today's economic news in just a moment. We do begin this hour in Minneapolis. The Minneapolis public school system canceled classes for the rest of the week in the aftermath of a deadly shooting by an Immigration and Customs Enforcement officer, ICE officer, as protests featuring tense standoffs with federal agents flared up again this morning. On the ground, Bloomberg News immigration reporter Alicia Caldwell joining us from Minneapolis, Minnesota. Alicia, good to be checking in with you. What is the status of any investigations into what happened yesterday, and what are we hearing about the sharing of information from federal officials to city officials and so on?
So that's the big development today. Overnight, the FBI and the U.S. Attorney's Office opted to keep the case internal to the federal government, saying, the state of Minnesota would not be a part of the investigation. State investigative authorities who had initially taken part, they were at the scene yesterday of this fatal shooting, and state officials, including the governor and the attorney general, had indicated they would be an active participant in sort of parallel investigations. That has all changed at this point. And I believe it's the Bureau of Criminal Apprehension here in Minnesota is no longer participating. And that agency has said, hey, we don't have any information. We're not getting any access to investigative files, reports, audio and video, witnesses, and so on. So their officials don't feel they can participate in any meaningful way, having been cut out by the federal government.
What's happening on the ground now in terms of protests? As Carol mentioned, schools were canceled and have been canceled for the rest of the week in the aftermath of that deadly shooting. What have you found on the ground?
Right. So there's a lot of tension here in Minneapolis. This is a community, not immune, obviously, to protests and social unrest. Everybody remembers the George Floyd killing in 2020 that sparked nationwide protests. We're seeing little sparks of those tensions again this morning. There were some tussles outside a federal building in the Minneapolis-St. Paul area where ICE and Border Patrol agents are staging. By the time I got there around 10:30, 11 o'clock this morning, the tension was palpable, but conflict was absent by the time I arrived. That said, there were many dozens of federal agents, Border Patrol agents, ICE agents, and the like, heavily armed, helmeted, many in masks, at least two wearing gas masks, standing in a street that separates a sort of a sidewalk area from the federal building complex. And so it's hard to call it a standoff, but there was, some back and forth shouting, or I suppose it's more protesters shouting, but those protesters were outnumbered by federal agents. Border Patrol's Greg Bavino, the sort of on-site commander for all of the interior operations of the U.S. Border Patrol, which you'll take note, Border Patrol is historically at the borders, both southern and northern, but larger concentrations on the southern border. He's been leading operations in places like Chicago, and he's now here on the ground in Minneapolis. And protesters were having none of it, shouting expletives and name-calling and so on.
Hey, Alicia, the immigration enforcement surge that we are seeing in Minnesota coinciding with heightened attention on a fraud investigation into Minnesota's child care and social sectors, including pandemic-era cases. Dozens of people have been charged or convicted, many of them of Somali origin. That's according to the New York Times. We're following this as well. Why are ICE agents in large numbers, I think it's safe to say, in this particular city? What is the immigration situation in Minneapolis?
Right. So the Department of Homeland Security calls it the largest such operation, immigration enforcement, with 2,000 plus agents in the area. There's reports of another 100 Border Patrol agents being dispatched from Chicago and New Orleans. They'd been there on sort of special details. It's a twofold investigation, right, or twofold probe of the fraud allegations and immigration. Mm-hmm. This area is home to a large Somali American population. It's important to note, though, that Somali American population has that hyphen, American, right? These are folks with green cards, which is legal permanent residency, and U.S. citizenship. So the community is a few generations old, if you will, with new arrivals, of course. So what's happening right now is multifold. The fraud probe, as well as sort of traditional, if you will, what we've seen in the last year, immigration enforcement. In some cases, that means stopping people on the street. In other cases, that is very targeted, very specific with a warrant and so on. Yesterday's operation is a little bit nebulous to us right now. It's unclear, other than the Department of Homeland Security said it was a targeted operation. And then, of course, the woman who was shot, Renee Nicole Good,
right,
was not the target. She's a U.S. citizen. She was described by some as a legal observer. Her vehicle was blocking the road, and the video shows what it shows, right, and the aftermath.
All right. Well, appreciate the update, and certainly a situation we continue to follow. Bloomberg News immigration reporter Alicia Caldwell on location in Minneapolis, Minnesota. All right. We do want to, as we continue to follow that, we are following a lot of economic news coming out on the U.S. economy, and also trying to kind of fold in everything that's going on and what it means for investors, Tim.
Yeah, and that, of course, is the U.S. economy. Companies here announcing fewer layoffs last month while planning more hiring, potentially easing fears of a sharper slowdown in the labor market. Also, U.S. labor productivity accelerated in the third quarter to the strongest pace in 2 years, adding to evidence that efficiency gains are suppressing inflationary pressures and wages. And the U.S. trade deficit narrowed in October to the smallest since 2009, a sharp pullback on imports, notably pharmaceuticals. Weighing in on the U.S. economy and the Fed rate trajectory, on Bloomberg Surveillance, Fed Governor Stephen Miron.
I'm unsurprisingly the lowest odd. I'm looking for about 1.5 points of cuts. A lot of that is driven by my view of inflation. Underlying inflation is running within noise of our target, and that's a good indication of where overall inflation is going to be going in the medium term. But then the unemployment rate is 4.6%, right? So that means that there's about 1 million Americans who don't have jobs, who could have jobs without causing unwanted inflation, without causing unwanted upward pressure on inflation.
All right, that, of course, is Fed Governor Stephen Miron this morning on Bloomberg Surveillance. The New York Times also reporting that the president says he has made up his mind when it comes to his Fed chair pick. So let's talk the economy.
I thought he had already made up his mind.
It's the thing that keeps on promising. At some point, you got to make a pick. Yeah. We'll see. When it comes to this president, he'll make up his mind, I guess, when he's ready, right? Let's talk about that, the Fed pick, the Fed policy, the U.S. economy, and really what it means for markets and investors. With us is Bloomberg Economics U.S. and Canada economist Stuart Paul right here in studio, along with Alli McCartney back with us, Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners at UBS. Happy New Year. Good to have you both. We decided to put you together because we feel like it all makes sense. But Stuart, we want to start with you. Fed Governor Miron is advocating for 150 basis points of cuts in 2026. Do we need that? Would that make a difference in the labor market? And is that what needs to be targeted when it comes to the Fed?
I think 150 basis points is way too much. I think that it really assumes that policy is super restrictive right now. But when you look at, let's say, credit spreads, when you look at asset valuations, when you look at household bankruptcies, when you look at credit card delinquencies and auto loan delinquencies, it's pretty clearly the case that monetary policy is not so restrictive that 150 basis points of cuts is warranted. I think that when we then look at the labor market, it looks to me like a lot of what we're seeing, the slower absorption of labor by firms, it looks like that's mostly due to a structural rebalancing rather than cyclical weakness. And when that's the case, again, why rush to make cuts? Why rush for 150 basis points of cuts this year?
Alli, you're nodding. I see you. Come on in.
Well, look, I mean, I think there are two things.
You don't have to agree with Stu just because he's next to you.
Fair. First of all, the relationship between monetary policy and the labor market is tenuous at best. Second, inflation, as they said, is exactly where they think it should be, and that seems to be proven out. And the cyclicality has been significant. Part of why we are where we are right now in terms of market highs, in terms of things like where precious metals are, is because growth has surprised to the upside again and again. And you're seeing that, and to tie this all together, you're seeing that in productivity. When you look at the 18 companies that have off-cycle reporting and have already reported full year and third quarter, they are beating by, as did in the third quarter, about 2 times what the street had expected. So they're beating at about 14%.
So things are pretty
and
good.
Not on revenues.
Yeah.
Not on revenues.
Okay.
On productivity gains, on margin. And so things are pretty good. There's a lot of noise. A lot of it's coming out of DC, like moment by moment, but things are good.
Well, that noise from D.C., Stu, and we talk with you and we talk with Alli about this. I mean, we think about yesterday, all of the social media from President Trump, whether it was on the housing market, whether it was on defense companies. There's a lot, everything that happened in Venezuela, which makes you think, okay, what geopolitically next might happen? How do you continue to pull that in? And Alli, we're going to ask the same of you. How do you continue to pull that in and factor it into maybe economic projections, or do you not?
Well, we do. We do think that there's going to be a considerable amount of fiscal tailwinds that support growth throughout 2026. We do get a lot of noise when it comes to things like housing policy. And then when we factor in something like a banning of institutional investors from buying homes, we then have to think about the knock-on consequences for home valuations, for household wealth. It starts to get very tricky. So we're sort of moving at the pace of policy as opposed to at the pace of rhetoric. And right now, where we see the policy stance is that deregulation, fiscal tailwinds are going to support growth throughout the year. And again, when that's the case, no need to rush for cuts.
Alli, what about when it comes to more spending from the U.S. government? What if the president gets his wish and sees an additional $500 billion in the defense budget up from $1 trillion?
Well, then we have a couple issues because there's both sides of that trade, right? So then we have increased fiscal tailwinds, which are already, through the big beautiful bill, which are already sort of myriad, and we've seen them already in a sense.
You're talking about the deficit and just
then
spending.
You have the deficit, right? So all of these things play together, and I think to your point, right now you have to invest on Fed directionality, not magnitude, earnings, which is going to be significant this year, probably 10 to 12%, and much more broad. Well, when we say much more, there are about 10 companies that made up 50% of the earnings in 2025, and quite honestly, the year before and the year before. Now they're going to grow at about 22%, while the rest is going to grow about 4 or 5%. But believe it or not, there is some more breadth to that. But those are the fundamentals you have to invest in. And then you have to understand that this concept that has been coming out of Washington the last couple of days, which is affordability, is a big deal because midterm elections are this year. Mm-hmm. And so there is going to be a lot of policy put forward, a lot of rhetoric, and it's almost going to be like a live action show for the next number of months. You know, seeing what happens between Trump and Congress, what happens in the Fed, and sort of figuring out what of these are, you know, could happen 100%, what could happen 0%, and what's happening in the middle.
Stu, you've been looking at the midterms, right, and doing some kind of in-house calculations a little bit about whether or not we might see a GOP pushback, or maybe it won't be as strong as everybody's expecting.
Yeah, Alli brings up an interesting point about just how much affordability has been at the forefront of people's minds, including for voters. When we then take a macroeconomic perspective and we think about what really matters for voters, as much as they're focusing on affordability, because it mattered for the Mamdani election in New York, what seems to matter most are things like inflation, playing into affordability, and improving living standards. And when we then model out what the change in the structure of the House of Representatives is going to look like after the midterms, it actually doesn't look like voters are exactly rushing to flip the House. Right now, the betting markets are assigning about a 70% probability that the House flips to Democratic control after the midterm elections. But when I model out control of the House based on those major economic variables, inflation and standard of living, it looks like just about 4 Republican seats will flip. Again, this is very top-down, and when you look at politics, you really need to go bottoms up from the congressional district and really understand how people are living district by district. But it doesn't exactly look like it's a mortal lock that the House is going to flip. It actually looks like it's going to be much closer in the president's favor in the midterms than betting markets are supposing right now.
So, Alli, bring it home to the markets for us and to where you're advising people to put their money.
Yeah, so this year I called my last note lather, rinse, repeat. Over the last 2 years, you've seen the same thing. You've seen decreasing interest rates helping bonds and equities. You've seen equities doing extremely well. Actually, last year, U.S. equities were dwarfed, in a sense, by non-U.S. equities. And you've seen commodities for a whole host of reasons, including the dollar, including geopolitical risk, increase. I expect more of that to happen this year because I think what we have is the same levels of support and growth, Fed directionality, fiscal tailwinds, AI, but we also have another that GDP keeps on surprising to the upside. And so really there are a lot of tailwinds, and I also call it like fear of heights right now. It's hard to want to invest in these things, but there's reason to be bullish.
We got about 30 seconds left for each of you. Alli, I just want to ask you, were you making investment decisions based on what President Trump had to say about institutional investors not buying
Absolutely
housing
not.
Or about defense?
Absolutely not. We make investment decisions based on the fundamentals of stocks, companies, and the macroeconomy. When and if that changes, and these things could markedly change that,
right, then
we would make maybe tactical changes where we would overweight defense in something,
but not
like
on
that.
a tweet.
But in terms of absolutely, that you'd get brain damage from doing that.
25 seconds left for you, Stuart. Are we going to get brain damage coming off of the jobs report tomorrow? No, just real quickly, what do we need to know?
No brain damage. I'm expecting 80 to 100,000 jobs added in the month of December.
It feels low.
It feels low if we consider, the post-COVID hiring boom, but in the context of the break-even pace of hiring, that's about double the pace needed to maintain a steady unemployment rate. 80 to 100,000 jobs would be a very good jobs report.
Great stuff. Thank you both. Really appreciate it. Our own Stuart Paul, Bloomberg Economics US and Canada economist, and always our thanks to Alli McCartney. She's Managing Director of Wealth Management and Private Wealth Advisor with Alignment Partners over at UBS. When we come back, we're headed out to Vegas and CES.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow higher, the S&P, NASDAQ both in the red. NASDAQ 100 index as well, moving lower. Tech stocks tumbling. Right now, the NASDAQ 100 down 0.8%. NASDAQ Composite down 151, drop there of 0.6%. A little change on the S&P right now, down 4 points, down under 0.1%. S&P right now at 69.16. The Dow up 270, holding on to a gain of 0.6%. And the Russell 2000 index of small cap shares gaining now by 1.1%. 10-year 4.17% with the 2-year 3.48%. Gold down $8 the ounce, 44.48, drop there of 0.2%. Silver is down 3.2%, 75.71 the ounce. And West Texas Intermediate crude up 3.1%, 57.74 for WTI. Bitcoin, meanwhile, 91,000, up by under 0.1%. J.P. Morgan Chase shares are up 1.1%. J.P. Morgan's going to replace Goldman Sachs as the partner for Apple's credit card business, bookending Goldman's costly foray into consumer finance. Again, J.P. Morgan Chase shares, they are trading higher by 1.1%. Apple, meanwhile, down 1.4%. Again, recapping, S&P lower, little change, down under 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So a lot going on this week, and there's a lot of news out of the tech sector once again. We have a Bloomberg exclusive about China planning to approve some imports of NVIDIA's H200 chips as soon as this quarter. This is according to people familiar with the situation, giving the company renewed access to a critical market. And then you pointed this out to me, saying you got to highlight this in your gainers today. Alphabet, big move.
Yeah, overtaking Apple intraday today to become the second most valuable company by market cap, a reflection of how the company has emerged as one of the most significant winners when it comes to AI. And then, of course, Carol, there's everything coming out of CES. Humanoid robots doing stuff kind of slowly, but still, they're there. To everyone seemingly talking about autonomous everything and AI everything.
Yeah, including NVIDIA's Jensen Huang, Anduril Palmer Luckey. We saw that interview and heard that interview yesterday. Also, AMD CEO Lisa Su, many, many more. We want to head back to CES and to Vegas and to Bloomberg Tech co-host Ed Ludlow, who, along with Caroline Hyde, has been talking with really the top names when it comes to innovation and technology. Ed, we've got a bunch of things we want to get through with you, but first of all, this week, what do you think were the biggest developments? Sure. And in your view, what stood out as you kind of walked the floors, maybe talked with different folks?
You know, they're separate. You know, there's what happens at CES and what's said at CES, and then there's the showroom floor. NVIDIA dominates everything, right? And what's so interesting is if you consider the share performance over the last 4 days, so I think we're down almost 3% in this session, right? You know, there was a lot of angst coming here that we would start the year with some euphoria because NVIDIA would tell us something that was needle moving, that would propel the stock forward. And it didn't quite happen. That said, if you kind of put that to one side, everyone is talking about NVIDIA in the same terms. So earlier today, we caught up with Steve Zhang, kind of this storied Silicon Valley VC, who described NVIDIA in, I think, probably the most appropriate terms. And I wanted to play this soundbite for you guys.
NVIDIA on a larger scale at this show is what they're doing is they're king-making. They're king-making an entire sector. They're saying, you know, a year ago they were talking about robotics. This year they've transitioned that into physical AI. Now they're not just talking about robotics, they're talking about autonomy and mobility because it's coming to a crescendo. And so they're very, very smart in saying, we're sort of like the Fed, right? We're the Fed for AI.
The Fed for AI.
Kingmakers, the Fed of AI. I mean, that's the tagline for the rest of the year, right? And to answer your original question, if you walk the booth and you see a humanoid robot, whether it originates from the United States or from China, it likely has an NVIDIA chip for inference in its brain. And that's kind of sums it up, really.
Is Steve right with his analysis, Ed, that the biggest difference when you look at last year versus this year in Las Vegas is that, yeah, they talked about robots last year, but this year it actually is physical AI. Is that what you would say is the biggest distinction?
Yes, I mean, spoiler, I have a big weekender piece coming out, particularly about NVIDIA's proposal for autonomous driving. There was a lot of substance there in what it plans to offer and sell to the car makers, and it very much steps on the toes of Tesla. You know, the reality is NVIDIA and Tesla are gunning for the same thing. But that's why when we started this conversation, I said there's what is said and happens at CES, and then there's the showroom floor. In markets this week, look at the memory and storage names and the volatility we've seen in them. A comment from Jensen that he doesn't need cold water for his servers anymore sunk an entire sector, you know, in cooling and some of the fan providers. So that has been the effect, even if NVIDIA's own shares hadn't sort of moved to the upside.
Ed, was that the most important thing that we got from Jensen at CES?
No. So they're reporting today from Bloomberg that China is going to okay some clusters of H200 for Alibaba and Baidu is really important. But over 4 days, Jensen Huang said many times, we think that demand from China is there and it's strong. Bloomberg's Ian King asked the decisive question in the 90-minute press conference on Tuesday, which is, in October, you told us a forecast of $500 billion of sales just for your Blackwell and Rubin data center chips, excluding China. Ian asked Jensen if that number would get bigger and if China would be a contributor, and he answered in the affirmative on both. Yes, he expects actually that $500 billion forecast is now bigger and that there is contribution from China. And because of all of the constant headlines and drudgery and Jensen wearing 4 different jackets and appearing in 4 different places, that kind of got missed a little bit by the market. And I'm being deadly serious. That seemed to me a very strong statement that this kind of big number they'd already given us, $500 billion, actually is probably bigger at this point.
Where's that coming from exactly, and where is the opportunity for that to even grow? I mean, if you're an investor in this company, you still want to see the growth. The promise of physical AI is certainly part of that. But there's a big delta, Ed, between cars being all over roads in the United States that are autonomously driven and humanoid robots folding our laundry, and what we're seeing right now. There's a lot of time between now and then.
Correct. One tangible example is in the next 3 months, Mercedes will ship a version of their CLA vehicle here in the United States that fully relies on NVIDIA hardware and software, and initially will go to market with level 2 capabilities, basically advanced driver assistance, but getting you from point A to point B, navigating changing lane without you needing to take action as the driver. Tesla's FSD already does that, but that is happening now, and it's powered by NVIDIA hardware and software. And again, this is kind of what I'm going to be writing about this weekend. 1% of revenues, right, automotive for NVIDIA, but if their growth trajectory for data center is the template, you can see where that's going.
Right, and some would say, look, that's a market that has a lot of room to grow, potentially, for the company. Hey, I want to move to defense because we love listening and watching the interview you guys did with Palmer Luckey of Anduril. Timely, considering we had President Trump making some comments about defense companies and defense stocks. Take us to that interview.
Yeah, so just very quickly, I want to just establish the baseline that Anduril gets very tiny proportion of the overall contracts that are awarded to the legacy primes in the defense industry. We're talking tens of millions versus the tens of billions that a Lockheed or Raytheon would get over a multi-year period. But clearly, he is the leader of a defense technology company, and he was in the right place at the right time when those True Social posts and EO hit. Listen to his viewpoint on it.
Big picture, if these companies were doing really well, and if they were living up to their end of the bargain, I don't think you would see any action from Trump or others on this. It's really a reflection of how many problems we have with our defense industrial base.
He was transparent in the interview. These are his competitors. He is fighting against them to win those contracts. Bloomberg's Zoe Thomas, brilliant producer, got the key data point, which is the only data we have available. In unclassified missile contracts, 2017 to the middle of last year, about $115 billion awarded. 50 billion of that went to Lockheed and 20 billion of it went to Raytheon. So, that's where that's going. And he has a bias, but his point is that they started Anduril to try and move faster than those legacy companies do.
Is he right, Ed? Is it accurate for him to say that Anduril right now is actually on the competitive level with these established publicly traded defense tech companies?
Well, the other data point is that even though it's small now, as a growth narrative, Anduril and collective with other startups is increasingly winning bigger contracts. One of the provisions that the president first proposed on Truth Social and then put in the EO is to cap the salaries of the executives at the helms of those companies. And I've always found that Palmer Luckey's quite honest. And so I asked, how much do you pay yourself? And he's like, well, I pay myself $100,000 a year. But I also have a very large chunk of a $30 billion valuation company. So he was kind of candid about that. But he put it in terms that at the end of the day, the contracts that get awarded to those companies, that's taxpayer money. And so in a way, through American democracy, should taxpayers not have the right to kind of hold those leaders to account and say, you're not getting paid until you deliver on the agreements and contracts that you have? And he was okay with that.
Hey, one of the things we wanted to ask you, Ed, China's presence at CES, which, as Bloomberg's Saritha Rai says, at the heart of America's technology showcase. So it's American technology. But China was showcasing innovations such as playing table tennis, practicing kung fu. Is the U.S. behind China? What do you make of the U.S.-China race? And I don't know, what matters? Is it the race now with humanoid robots? Is it still the AI race? What are your thoughts on that?
I just read Saritha's story as well. She just published it in the last hour, right? And you can read the list. Fourier, Booster, Unitree, Goldbot, Agibot, Engine AI. They're all here on display. There is a very large contingent from Asia generally, but China dominates. Lenovo is a conversation that our colleagues from Bloomberg in Asia had, right? Lenovo is the #1 PC maker in the world. They have a very strong presence here. That is just the state of the market when it comes to PC. So that's not an uncommon thing. I think where people are slightly having a more tense conversation is a lot of the consumer electronics companies behind me have massive supply chain exposure in China. And so tariffs are a massive problem for them. Do you pass on a price to a consumer? Do you eat the price? And of course, that's what they're all grappling with.
All right, still checking. You coming home with a humanoid robot?
You gotta check.
Help you out with your little one?
You gotta check the robot.
Here's the question for you guys and your audience for the rest of the year. Is everyone listening? Are you ready to live with a humanoid robot? I don't know that I am.
Yeah, if they want to clean up the house and do dishes, I'm okay with it. I know what he says.
No, that's it.
Well, you can pull the chip out when you don't want them
That's
listening.
what you think.
Ed Ludlow, you rock. Bloomberg Tech co-host Ed Ludlow. Check out all of Ed and Caroline Hyde's conversations from CES. They are on the Bloomberg and at Bloomberg.com. When we come back, everyone wants to make housing to be more affordable. The question is, how do you do it? One view. When we come back right here on Bloomberg Businessweek Daily.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. A retreat for the S&P 500 index, a move higher for the Dow. Right now, we have got the Dow up 253, up 0.5%. S&P is lower by 0.1% at 69.13. The S&P down 7. NASDAQ and the NASDAQ 100 index are both declining. Big tech stocks are tumbling. NASDAQ down 161, down 0.7%. The NASDAQ 100 index down 205. For the NASDAQ 100, a drop now of just about 0.8%. Russell 2000 index of small cap shares is gaining 1%, while our Mag 7 index is down 0.3%. The 10-year, 4.17%, with the 2-year, 3.48%. Spot gold down $5 the ounce to $44.50, a drop of 0.1%. West Texas Intermediate crude up 3.5%, $57.96 a barrel, and Bitcoin 91,186. Bitcoin right now up by just about 0.2%. Jefferies Financial, after earnings, down 5.5%. This ahead of big bank earnings next week. Right now, we are looking at JP Morgan Chase, which reports Tuesday up 1%. Also next week, Citigroup and Wells Fargo. Citigroup down 0.7, Wells Fargo up by 1.6%. Recapping the S&P, now lower by 7, down 0.1%. And for on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar along with Tim Stenovec live here on Bloomberg Businessweek Daily. U.S. mortgage rates ticking up for the first time in a month. They are still sticking close to their lowest levels in more than a year. And the good news, there is some affordability set to gradually improve as modest rises in home values mean that incomes can catch up, opening up a wider pool of shoppers able to buy a home. That's according to Karen Nigg. She is senior economist over at Zillow Home Loans. So that's going on. And then we had what President Trump had to say yesterday that made us all like, wait, what?
Yeah, this is at least his plan to make homes more affordable. That is to ban institutional investors from buying single-family homes. Not everybody agrees that's the way to do it, especially Conor Sen of Bloomberg Opinion. He's founder of Peachtree Creek Investments. He joins us from Atlanta. Conor, you have the column out this morning. You argue that this is not the right way for the president to approach housing affordability. Why is that?
I think the first thing you want to do if you want to make affordability better is you want to make sure that at least we're not building fewer homes as a result of any policy change. And my concern, at least if you're talking about preventing institutions from buying new homes, build to rent, things like that, is you're just taking away a source of demand from home builders. And rather than them selling homes to individual home buyers instead, they might just produce fewer homes because right now they're really struggling with profitability and weak demand. And I don't think you want to remove a source of demand. So I think you want to find other ways of facilitating transactions and improving affordability without really going after the home builders.
I always feel like, Conor, when we talk to folks in the home building market, it's a lot of it has to do with available land, buying land, and then dealing with local markets. We know real estate is such a local marketplace. I feel like it always comes down to more of that versus whether or not institutional investors are buying, especially when they're such a small part of the market.
Right. Like John Burns Research and Consulting has data that says that among the new home builders, new home market, institutions are only about 4% of the market. And they're really buying communities custom built for them. They're not competing with a 33-year-old about to have a kid to buy one-off homes. It's really, we're going to allocate a certain number of homes for institutions, or in some cases, when the market's weak, like it was in 2022, if home builders are really struggling to offload inventory, it's like, here's a buyer of last resort, so to speak. And that just helps de-risk the industry, where they can keep producing homes, knowing that even if market conditions turn more rockier, there is a buyer out there, even if households walk away.
Yeah, I think that data is really interesting. And I think there's a lot of politics in this too, Conor. I mean, you've written about the politics of rising prices, especially in your home area around Atlanta, and the way that power costs have increased. Maybe this is a way for Republicans to say, we are addressing, ahead of the elections, we are addressing the affordability issue. It seems populist and political at its core.
And I get how a lot of people in both parties see a headline like, keep Blackstone from buying your home. And that sounds compelling, but the facts just don't really back up that they're a major player. Like in Atlanta, they do own a fair number of homes. I think we're the number one market in the country for institutional ownership. But most of these homes were bought in the early 2010s in the wake of the foreclosure crisis. And at that time, there really wasn't much home buying demand at all. And so institutions stepped in to really prevent the foreclosure crisis from getting worse, prevent home values from falling even further, prevent banks from failing. And I think in 2026, we lose sight of that, but they haven't really been a big player in the market in recent years. These are just homes they bought 15 years ago in a very different environment.
I thought Jonathan Miller of Miller Samuel, he was on with Scarlett a little earlier today. He said that part of the issue is that the highest concentration of investment is in the South, where there's already excess supply of homes right now. So even though, and that's where these institutional owners of single-family homes have a high concentration. As Carol mentioned, so much of this is local. This all has to do with local. The issue it comes down to, Conor, is zoning and making sure that people are saying yes in my backyard to upzoning, yes in my backyard to building more dense housing. Is that the only solution here?
I think that's a big part of the solution. And the other one that I've written about recently is that in a normal housing market where we're selling maybe 5 to 5.5 million homes a year, people tend to move from north to south, maybe retirees in Connecticut moving to Florida, people in California moving to Austin. And because resale transactions are down about 25% from normalized levels, that migration flow isn't happening. And that's why the tightest housing market in the country right now is Hartford. And I've got a lot of love for Connecticut. I've got a cousin who lives up there, but I don't think that Connecticut all of a sudden became the hottest housing market in the country. I think just this decline in mobility and migration means that a lot of retirees who might want to leave Connecticut are kind of stuck there, and therefore their homes aren't hitting the market. And that keeps younger people in Connecticut from buying homes that maybe would have been available if people could move to Florida the way they could in the 2010s.
So, Conor, is it more not about an affordability issue? I mean, I was trying to look at some numbers, and I think it's about 66 to 67% of Americans actually own some kind of property or home ownership. I think it's 85 to 90 million Americans. I mean, so is it not an affordability issue? Is it more about people not moving around, that the houses are there, it's just maybe not where they need to be? And you can understand why home builders might be hesitant to build homes, because at some point, all the baby boomers, forgive me, a lot of them in my family, they're not going to be around anymore, and there's going to be home supply.
I think your point is a really regional issue right now. There are plenty of homes to buy in Florida and Texas, and the real shortage in the Northeast and the Midwest. And so you have this two-tier market where the places where builders build have plenty of homes. The places where builders typically don't, where zoning's harder, to your point, have a real shortage. And so I think you want to address both sides. To me, the elegant way is to try to find policies that will get transactions back to normalized levels, which that won't lead to more building in Connecticut, but that'll make it easier for homeowners in Connecticut who want to retire to the South to move out and free up that inventory for people in the North. And then to your point, people in the North just have to create zoning policies that allow for more homes to be built. And it's a hard fight that'll take time, but that's just part of the solution as well.
Yeah, and that's a local fight, as everybody knows who've been to the ballot box or followed local politics. Hey, Conor, before we let you go, when the actual publicly traded home builders that do the home building in this country, how much of it is on them versus the smaller developers, like the guy on my block, for example, who's bought 3 different homes and rehab them and flip those homes. How much is about that supply versus those institutional home builders?
I think the publicly traded builders that, again, are predominantly in the South and West, they're doing their job. They're trying to build homes. They're operating at profit margins that they don't want to be operating at. And it's the smaller builders that are dominating the Northeast that have a harder time accessing capital. They're struggling with cost and things like that. So again, I do think it's different issues. Mm-hmm. And so it's probably more of a local regional issue to address the true shortage of where it currently exists rather than a national solution where, again, publicly traded builders already are doing their best and they're struggling. And so they're not the bad guys here.
All right, going to leave it on that note. So glad we could catch up. Hey, Conor, have a good weekend if we don't catch you tomorrow. He's Bloomberg opinion columnist Conor Sen. He's also the founder of Peachtree Creek Investments. We do have some headlines crossing the Bloomberg terminal. A couple stories just quickly we want to bring to your attention. This from the FT, Financial Times. Glencore and Rio Tinto, 2 big companies when it comes to mining and mining trading, and have restarted merger talks. So again, this is coming from FT.
That's just one story. I'm looking also at our reporting around Boeing. Shares of Boeing down about 0.9%. The company's CEO sees more work on company turnaround in 2026, according to a memo. Shares off their worst levels of the day. They fell as much as 1.3% after Bloomberg reported this. Still, Boeing down about 0.7% right now.
And we're seeing Glencore up almost 5%, the ADRs that trade here. Stocks on the move when we come back.